Meta did have a little bit of a mixed quarter recently, so let's just kind of take a deep dive right into it. This was last week figures came out, so they had earnings per share at $6.18, but the expected was $7.22, so I missed there by about $1, not the greatest. Revenue was at 60.80 billion versus 60.17 billion expected, so they did beat a little bit there on revenue, so at least got some brownie points there. A couple other things to mention: it did revise its revenue guidance, so it says revenue for this quarter is between 61 billion and 64 billion, or 62.5 billion at the middle of the range, and analysts were expecting guidance of 63.15 billion. So they did kind of tighten it up a little bit. And then it says the company said the guidance assumes foreign currency is approximately 1% headwind year over year total revenue growth based on current exchange rates to kind of help explain that. Did mention that the DAP, the daily active people, came in at 3.6 billion, which is a metric they track, and Wall Street was expecting 3.61 billion. So just a smidge under what the expectation was. It's not too terribly low, especially if we're talking about billions of people. Capital expenditure, they revised its guidance. It says its guidance for the year is now between 130 billion to 145 billion. Its prior range is 125 billion to 145, so it just kind of tightened up that lower portion of it. And it says that Meta's pouring money into AI infrastructure. Meta's free cash flow dwindled to 784 million in the quarter, which is from 8.55 billion a year earlier. So they were definitely on quite a spending spree to go from 8.55 billion from last year to 784 million. So that is a ton of money being invested into a lot of stuff, mostly AI, what kind of mentions. Basically, this next part just says it's down 11% for the year after Wednesday's close. Again, this was last week, so it's probably going to be changing by the time you're seeing this video. They do mention that they put a lot of work into AI infrastructure and AI investing. Specifically, they hired a guy, Alexander Wang, and he's kind of the head person who's looking into AI and kind of seeing how they can incorporate it in their business model, things like that. He says that they're offering it at a cheaper price than OpenAI and Anthropic from what they're working on, so hopefully that'll help get them some more revenue as they continue to improve it. It says net income for the period slid to 15.85 billion from 18.34 billion, or $7.14 per share in the same quarter of last year. So it did go down a little bit from last year in terms of net income, but that's kind of expected just because a lot of spending, and then obviously some of the numbers and the users are down, so you're gonna get less money from that. So overall, definitely a mixed quarter for them.
We have right now that Tipranks is 759 average, a low of 580, and it's 36.5% upside. We still have 37 buys, 5 holds, 0 sells, and pretty much everyone has maintained their price target for the next year or so. And I do agree with this. I am bullish on Meta, and I'll probably be buying more shares on the dip. It dipped about 8%, so it does look good overall, I would say. Now, when we take a look at the DCF, alpha spread changed it a little bit, but regardless, it looks like the revenue growth for the next 5 years, because I always have 5-year forecast period, is 16.6%, and it is undervalued by 34%. So true value is $839 in 5 years. The next segment, which is free cash flow. The problem is free cash flow, and Dom was mentioning it too, there's a lot of AI spending, and free cash flow is going to be negative for a couple of quarters, I would say, in the future. And that's why the stock had such a negative reaction. So you do need to be aware of that. The financial health of the company, of course, is going to be very good. There's no concern here. When we take a look at Meta's actual stock, 556 right now, a 52 low of 520 and a 52 high of 796. It's certainly on the lower end of the spectrum. And lastly, when we check the net income Dom mentioned for the quarter, this is for the couple of years past, we're going to see that it's 23.2 billion in 2022, and then now it's about 68.1 billion. It's certainly more than doubled. I would say overall, it looks great.